Money Talks is sponsored by Astound Broadband, powered by Grande.
Welcome back, everyone. Well, we know one thing. The markets hate uncertainty because depending who wins the presidency and their laid out agenda, some stocks will do better than others under each administration. And right now, the market really doesn't know what will happen in November. Now add to that turmoil and war in the Middle East, and it's pretty chaotic. So for tonight's Money Talks, we discuss surviving election year volatility. After market dips like Monday, it's always nice to have cash on hand. Certified financial planner Neil Vanoy explains why.
Having a good cash reserve can calm your nerves when the market is volatile. Not only does having cash help you sleep at night, not having to worry about the volatility, but it can also give you some dry powder to deploy when the market does go down. If it does go down, help you add to your portfolio.
Don't be reactionary over this short stint leading up to the election. You've already got the cards you've been dealt, so play them in the short term.
The time to review your risk tolerance is before a downturn, not during one. So you want to consider how you reacted to volatility and downturns in the past. And if you were too nervous or if you sold during the downturn, now might be a good time to lighten up on stocks. Make sure you're in a good stock and bond mix, something you're comfortable that you can stick with during volatility and going forward.
This next point is near and dear to me. If you're getting a lot of financially turbulent news, it could give you some real anxiety. So set those investments and maybe check out for a few months.
Watching the financial news, especially during an election year, can lead to a lot of unnecessary worry. So when you watch it, avoid getting caught up in the doom and gloom. Really make sure you consider the source of any news that you're watching, and just realize that nobody cares more about your finances than you do. So don't just make investment moves based on the headline. And it's always best to get advice from a professional that knows your personal situation rather than just any general advice you see.
And perhaps most importantly, realize that over the long run, stocks tend to do well no matter who wins the election.
It's easy to get caught up in the idea that whoever wins the presidency or controls Congress is going to drive market performance. But keep in mind that what the market doesn't like is uncertainty. It's not that the market's rooting for someone to win over someone else. We get this volatility from the uncertainty we see during election times.
That makes total sense. Now, if you'll recall, Hillary Clinton was such a large percentage bet to win in 2016 that the market fell into immediate correction range once she lost. But once the market absorbed what had happened, it came roaring right back. Something similar could happen anytime leading up to or after the election this year. We'll just have to deal with it. Don't panic, Lindsay. That's the key here. You got to stay like Fonzie. You got to stay cool. Hey,
cool is my middle name.
Okay.
Daily Rewind.